So, one of the question comes to my mind: why multifamily? There's multiple asset classes within real estate investing. Why did you pick multifamily?
Yeah, so this is going to go to my risk averse nature. So
Mm-hmm.
I looked at single families, I looked at office, I looked at medical, I looked at retail, I looked at all of these different asset classes. And I when I came back to multifamily, I'm like, well, wait a minute. I wait, what if office, what if we have a downturn in the economy? Well, then office might not do so well. What if a retail place has a downturn in the economy, right? Well, that might not do so well. But wait a minute, people need a place to live. Like that's probably not going to go away, right? I mean, that's probably there forever. So hopefully, and if we have that, if we don't need a place to live, then we don't need to worry about money because money is not even an issue anymore. So I had this asset class that I couldn't figure out how to make it go away. It was a
Mm-hmm.
basic bread and butter thing. And as over time, what I learned, remember those first three deals, I made 500,000 in 3 years. Like that was insane amount of money.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. As a real estate investor and a fund manager, I'm always excited to explore the world of real estate opportunities with you and for you. And today I have Ken Gee with me. Actually, I was joking with him earlier that is Ken G or Ken Gee, and he says Gee, but I'm going to use it Ken G, just like being more respectful, like in an Indian way. So, welcome, Ken G, to the Real Estate Vibe Show.
Thank you for having me. I'm thrilled to be here.
Awesome. So a little bit about Ken. Ken is the founder and managing member of KRI Partners, a real estate private equity and investor education firm. With over 26 years of experience in real estate banking and private equity, he has been involved in 2 billion plus in transactions, specializing in multifamily acquisitions, management, and financing. Today, we'll discuss the number one reason everyone should invest in multifamily real estate. So, a little bit about multifamily investing. It involves purchasing residential properties with multiple units, such as duplexes, apartment buildings, or condos, to generate rental income. It is a powerful wealth building strategy because it offers consistent cash flow, scalability, and long term appreciation, making it one of the most reliable and recession resistant real estate investments. So let's start what multifamily investing is. And Ken, I'm going to start with this question. What exactly is multifamily real estate investing, and how does it differ from single family investing?
Yeah, so I can't speak much to single family investing because I haven't done it. I know a little bit about how it works, but multifamily investing is like just like you said, multiple units. I think the smallest deal we've ever done is 22 units. So I like multifamily investing because I've got lots of different people that probably work for lots of different companies paying me rent. So I get a good diversified revenue stream, and I feel like that's more reliable. Compare that to a single family home. You've probably got one person that pays you rent, and if they lose their job or they moved out, that means your income went from good to zero. And
Mhm.
I just don't like that. I don't like that binary concept. So that's why I like multifamily. That's why we've always done that.
Yeah, I like it how you said it's reliable, and then you have the economies of scale as
Mm.
well in the multifamily. So let's talk about that. Why do we consider it as like more stable and scalable model when we look at from the investing perspective or as a like a investing strategy?
Yeah. So, the reason 27 years ago when I got into this business, I looked at single families, I looked at duplexes, and I just couldn't figure out how they would make money, right? I could see myself, okay, I'd get $100 a month of extra income, and then 2 years into the deal, the roof goes bad. And now I just lost all that money. That's how I looked at it. That
Mhm.
and I couldn't hire anybody to do the work on site. Because at the time when I started, I was working at Deloitte as a CPA, working a whole lot of hours. And I thought, there's no way I can go to the duplex or the single family home on the weekends and do work and turn units and things like that. I didn't have enough time. So I had to buy a multifamily property because I could run it like a quote unquote business. I had, and as it turned out, that's exactly what I did. I bought my first deal was 28 units, had a wonderful lady who lived there who got a rent credit and a little bit extra money, and she took care of showing the apartments and coordinating the maintenance, and I didn't have to be there all the time. So that's why I liked multifamily. Now, again, if one or two people moves out of your 28 unit building, you're still good, right? I mean, you have a little bit less money, but it didn't go to zero. So, I mean, that's why I ended up with multifamily, and that's why I think most people should do multifamily over single families.
Great. And then you mentioned you come from a CPA background, working for Deloitte, and then moving into the real estate investing
Mhm.
and making it a full-time gig for yourself. So take us through that journey. How did you get interested in this field?
Yeah, so the story is you have to rewind the clock 27 years. And so my kids were very young. My daughter had just been born, and I was working at Deloitte. I thought I was doing really well. I was. And I would do my daughter's 3 a.m. feeding. So every night I would do the 3 a.m. feeding so my wife could get some sleep because she was home with her all the kids every day. And so it was fun because if you're a parent, you know that father-daughter time is just precious, man. You don't want to give that up. It's middle of the night. Everybody's sleeping. It's just her and I. I mean, it's cool. Until I started realizing, wait a minute, Ken, it's 3 o'clock in the morning, and this is the time you get with your daughter. Like that didn't sit well with me. And I got worried, right? Because I went to school, got good job, did everything I was supposed to do, but yet I just realized that the best I could do for my daughter, because I didn't get to control my life or my schedule, I was working a lot as a CPA. The best I could do for my family was 3 a.m. And I realized that I was about to have my family grow up and I didn't get to see it. And that really, really bothered me. And that's what drove me into real estate.
Mhm. So what was your first deal like? Did you start as a passive investor or did you just jump
Mm-mm.
on it into the first deal yourself?
Yeah, no, I jumped in. I jumped in. It was myself and my in-laws at the time. I put in half the down payment. They put in half the down payment, and I did the deal. I was the guy. And remember, I told you it was 28 units, so I had this person on site that could do a lot of the work for me. That's how I started. Was it stressful? Oh yeah, it absolutely was. I took, back then there was no podcast like this. There was no education programs like what are out now. So it took me about a year and a half to just even get enough so that I understood how the business worked, that I was comfortable buying apartment buildings. So that's how I got started. I jumped right into the active side. Have I done a little passive investing? I have, but most of the money that I've invested in real estate's been in my deals.
Oh, interesting. And you said you jumped, jumping out of your box or
Yeah.
whatever you're doing, your daily pattern. It's like one of the biggest thing that anybody could ever do. So what was your mindset like, like what was that push that made you jump out of your box and then
Yeah.
just start the whole new thing? Because you just said you had a good job, you had a good education,
Mhm.
and you were doing really, really well for your family. You were providing your family whatever they needed. So what was that push or that I would say kind of the longing that I need to get out of this thing?
Yeah. It was the fact that I was afraid that my family was going to grow up without me. I mean, my
Hmm.
family means everything to me. And I mean, if you're a parent, I mean, your kids are everything, right? Once they grow up, they're grown up. They're
Hmm.
not kids anymore. And so that was the driving force. That coupled with the fact that, I was always worried that somebody else, if I did, frustrated the wrong person, made the wrong person angry with me, I could walk into work any day and get canned, and now I had no income, right? And I didn't want anybody else to be in charge of my life. I wanted it to be me, so that I could decide when I was going to spend time with my daughter, with my son, and my whole family, and that was the driving force. That the family thing was the number one reason.
Wow, that's good. I like that. How your family was your driving force to get into
Hmm.
something bigger and better. But what was going on in your mind when you got into the first deal? Were there any limitations, any barriers? Did you feel like, oh, I'm going to succeed? Or was there some kind of fear? Oh, what if I fail? What's going to happen? What is the backup plan?
Yeah, that you're very insightful. That was a really good question because uh, I can remember my first mortgage that I signed on for my 28 unit building was $460,000.
Mhm.
I was signing on it personally, and it stressed me out to the max. Why? Because if I screwed that up, my house, my family, my car, everything would be ruined, right? And I remember feeling, I've never felt it since, but I felt like I had a golf ball in my throat. I was that stressed out because I just was. I mean, I was taking risks that I wasn't used to taking, but I did everything I could to get some validation. I hired an attorney, paid him $3,000. He owned 4,000 units. So he functioned as my attorney, but also as my validator to say, oh, Ken, I know this deal. I know the property. I know the neighborhood. I know the seller. I think you're going to make 100 grand in 3 years on this, or in 5 years on this deal. As it turned out, we did quite a bit better. But what I was trying to do was to mitigate all these risks, right? I thought if I have somebody with a lot of experience look at this deal and say, yeah, this thing should work, then that made me feel good about my decision to buy that and, the way I looked at the numbers and so on.
Wow, this is so interesting. You know how we always look for a outside validation to tell us somebody that you're doing good. That gives
Yeah.
us confidence to move forward. So
Yep.
I just wanted to dwell on that a little bit, and I think this is the reason a lot of people they just kind of sit on the sidelines all the time because they do not have that kind of support or they do not
Right.
have that kind of validation. Okay, you invest, you'll do better, you'll make more money than you're doing, stock market or your 401k or whatever. You can do much better in the real estate investing. But they don't
Mhm.
do that because they don't, maybe they're missing that piece out there. So I just wanted to ask you that, how valid is that? It's not necessarily 100% valid because it's like somebody else is coming and giving you kind of certification, okay, you're doing good, but you know that yourself too, where you're coming from, where you're starting, where
Yeah.
you want it to go, your address. So isn't that something that you need to resolve within yourself beside looking outside?
There is. It's again, that's a really good question. We help people get into this business all the time. That's the side of our
Mhm.
business that we operate. And what I've learned over the years is one of the biggest things that stops people is people are generally risk averse. They
Mhm.
don't want to lose money. They don't want to go bankrupt. And they know that they don't know really what they're doing. So it's this
Mhm.
knowledge thing.
That's true.
I find that if people take the time to roll up their sleeves and learn how to underwrite and really learn from somebody else who's been in the business, that knowledge gives them confidence to move forward, right? The more
Mhm.
knowledge you have, the more confident you're going to be. And
Mhm.
so that's the number one thing now that helps people get over that hump. I tried to do that back then, but there was very little, again, there was no podcast like yours. There was no educational programs like what we have. It just didn't exist. I think
Mhm.
there was one, it was called, who was it? Carlton Sheets. That's what it was. Carlton
Mhm.
Sheets was a single family home guy, and I didn't even do single family homes, but it was the only program really out there. And anybody that wanted to get into real estate would buy that program. So it's knowledge. I'm telling you, that's the number one thing. Because once you understand and now your conviction just gets so much better, and that conviction creates confidence.
That's true. You said it very well. That conviction creates confidence. But the other thing that you mentioned is the knowledge. Knowledge is very
Yeah.
important. But for all this, you need to have the mindset first, right? You have to train
Yep.
yourself a little bit. I want to do this. Unless you have that mindset shift that I can do something bigger and better
Hmm.
with my wealth or money, whatever way you wanted to call it. And then I can, have maybe exponential I'm not going to use the word returns, kind of addition to my whatever I'm doing. But this is
Hmm.
all mindset game right here, right? So
It is.
mindset plays a big role in that. So what do you
Yep.
have to say about that? How did you train your mind, or did you already have that mindset and you were like, okay, I know what I'm doing, I'm going to do it. But there was like something beyond that helped
Yeah.
you get here.
Yeah, again, a great question. So I can't tell you that when I bought my first deal, I knew what I was doing. I did not know what I was doing. I did my
Mhm.
best to gain as much knowledge as I could, but I didn't know what I was doing. I just didn't. I mean, we know what we're doing now, but 27 years later and, a couple $100 million in deals later, yeah, I know what I'm doing now. So, how did I get through that mindset issue? Well, it was tough back then. I had this belief that I wanted to change my life, and I just hyper focused on it. See, up till that point in my life, and when I wanted to be a banker, everybody said, "Oh, they'll never hire you." When I wanted to be a CPA, they said, "Oh, they won't hire you. You're too old." Oh, and I wanted to go into tax. Oh, they only hire attorneys for tax. Don't even bother. So don't even bother trying to become a CPA. So what is happening to me, and I didn't understand it at the time, but I was suddenly being faced with these obstacles, and then I just kind of pushed through them. And so what happened is I started to realize, wait a minute, I can just go do this. Like if Carlton cheats on TV and his videos, he's no different than me. He's just a human being, just like I am. Like, why can he do it and I can't? And so over time, you start to change your mindset and you become much more confident to go out and do new things. Now, today, my mindset is completely different than it was back then. Back then, it was a struggle. It was. I just had to push through it. That's why I had the golf ball in my throat, right? That's what it felt like. So you're not wrong. Your mindset is 100% of it. And I think the biggest thing that helps people, number one, they got to believe that it's right, that they can do it, and that comes from watching other people. And then number two, when they have knowledge, then that just it is enough to push them over the edge so that they do take that action and do it.
Master, you said it very well. And I think the experience counts because 27 years down the road, you have so much experience and
Yeah.
your perception has increased with all the knowledge and all the, tools that you brought under your belt. And all of a sudden, you are just like raise your level. You're just like maybe
Yeah.
10 steps or 20 steps ahead of a lot of people. And then you can look down and tell them, okay, I was there 27 years ago, but
Mm-hmm.
now it's a different vision, totally different ball game. And this is very
Yes.
important. And then the question that comes to my mind is when you started 27 years back, right? You said you did not know enough, but you still had the courage to do it. So
Yeah.
how important that is for people, I wanted to my listeners to hear from you, that how important is it to take the first step? It doesn't matter where you're starting from, it's important to
Right.
take the action, take the first step, and then you learn as you move along versus if you wait that you're gonna first you have all the knowledge, I'm going to have all the experiences, I'm going to do everything, then I'm going to take action, which never going to happen because unless
Right.
you take an action, there's no experience, and life is all about creating new experiences.
Mm-hmm.
So
No,
if you can
you're
talk about that, how important is it to take the first step regardless how much you know at that point?
yeah, you're not wrong. You do have to. What it comes down to is having confidence in yourself
Mm-hmm.
that you're going to be able to figure out. You don't know what's coming. You really don't. You think you're going to try to figure out what's around the corner, but you don't really know. So
Mm-hmm.
you have to have the confidence to say, wait a minute. So as I look, this is how it worked for me. All right. So I was the first person to go to college in my family. I did it. Oh my gosh, I did it. Then I was the first person to become a CPA. Wait a minute, I did it. Right. It
Mm-hmm.
was it was that constant, oh, okay, I just need to go do it, right? And so since then, I mean, I became a pilot. Oh, wait a minute, what, a pilot? Like, why? Because I just wanted to try it. I thought it would be fun.
Okay.
So what
Mm-hmm.
happens is you're right. You have to take that first step. You're not going to know everything, right? I don't think you should go ready, fire, aim either, right? I don't think you should go without any clue, but I think you do have to be willing to take those risks and just know that in the back of your mind, oh no, I'm not failing. I am not going to fail. I will figure this out some way, shape, or form. And if again, this is the belief thing that you can well, let me back up. What I've learned is that people look at these things. Like people tell me all the time, I don't have any money, Ken. I don't have any net worth. I have no idea what I'm doing. I've never done this before. Like, why do you think I can buy an apartment building? That's what they say. That's how they look at themselves. And I'm like, well, wait a minute. That was me 27 years ago. I didn't have any of that stuff. None of it. But I knew that I wanted to learn. I had some drive, and so now I just had to go solve those problems. And that's what I
Mhm.
did. And as soon as you switch your mindset to that, wait a minute, these aren't things that will stop me. These are problems that I have to solve. And yes, they are solvable. Every single problem is solvable. You just had to believe you can solve it and then go about solving it.
That's true. I like that. And I believe in that too. There is a solution. That's why there's a problem, right? It's a
Mm-hmm.
challenge for you to get to that solution.
Mm-hmm.
So let's move on to our multifamily. Like you said, everybody should invest in multifamily. So one question comes to my mind, why multifamily? There's multiple asset classes within real estate investing. Why did you pick multifamily?
Yeah, so this is going to go to my risk averse nature. So
Mm-hmm.
I looked at single families, I looked at office, I looked at medical, I looked at retail, I looked at all of these different asset classes. And I when I came back to multifamily, I'm like, well, wait a minute. I wait, what if office, what if we have a downturn in the economy? Well, then office might not do so well. What if a retail place has a downturn in the economy, right? Well, that might not do so well. But wait a minute, people need a place to live. Like that's probably not going to go away, right? I mean, that's probably there forever. So hopefully, and if we have that, if we don't need a place to live, then we don't need to worry about money because money is not even an issue anymore. So I had this asset class that I couldn't figure out how to make it go away. It was a
Mm-hmm.
basic bread and butter thing. And as over time, what I learned, remember those first three deals, I made 500,000 in 3 years. Like that was insane amount of money.
I
I
know.
mean, it's
Yeah.
just like, oh my, are you serious? So
Mm-hmm.
now I was like, wait a minute. If I can create this kind of income off a relatively low risk asset,
Mm-hmm.
why wouldn't I do that? Like, I don't
Mm-hmm.
know why you wouldn't. I don't know why you wouldn't. I can't imagine a scenario where I wouldn't. That's why I don't invest in the stock market. I don't do any of that stuff. I do 100% real estate. I'm in charge of all my money. I'm in charge of my own success. And now we have tons of investors that come into our deals, and we're all marching down this road together on this relatively low risk asset class that I can over time, our full track records on our website, but over time I've done 15, 20, 30+% annual returns. Like I don't need to do anything else, right? I've got relatively low risk and I've got a risk return trade-off there, a risk return profile that I can't figure out how to beat it.
Oh, nice. And there's multiple income streams, right, within
Mhm.
multifamily too. There's a cash flow and there is appreciation. And also there is you can get the tax advantages through the
That's
bonus
right.
depreciation, and that's coming back. So if you can just tell us about that, how was that when it all got unfolded to you? Oh my God, this is not just one passive income. I'm just having multiple
Yeah.
streams of income, and how I can multiply everything quickly.
Yeah. Yeah. So early on, we didn't even take cash flow distributions out of the building. What I
Mhm.
accidentally learned was you want to increase the income of the property because that's
Mhm.
how its value is determined. So
Mhm.
now when I talk to people, I'm like, what's interesting about what we do? The little cash flow that you get quarterly, I call it a drip for a reason. It's a little drip, is little, right? And it's
Mhm.
important. Investors like it,
Mhm.
but it's not where the money is. So that cash flow is the most minor part of the deal, but it actually drives the entire deal because as I grow cash flow, I grow value. And that's where massive wealth is created, right? Tax benefits are cool. I call those icing on the cake, right? Cherry on top, whatever you want to call it. I want the deal to make sense financially first. Oh, and by the way, I get all these tax benefits, right? So I again, cash flow is important, but I know 100% I'm going to focus on growing cash flow because when I do, I'm going to grow value.
Mhm. Interesting, how it's like amazingly multiple channels open up for you when you
Yeah.
just start looking into investing one time. And you said this is like a small little drip but it's good drip because a lot of investors, they just cling to that. They are attracted to that cash flow only because we all
Yeah.
heard that too. Cash flow is a king, cash is
Yep.
king actually. And then
Mm.
if they say if there's a consistent cash flow quarterly or monthly, they like to get into those kind of deals, and that's obviously it's a good thing with value add multifamily or any kind of multifamily, basically. But there's another thing that I'm going to say over here, leverage, because we leverage these deals, we get this huge loans and stuff, and leverage plays a big role because that helps you to grow the wealth exponentially. So if you can talk about that too, how does that play a role for an investor? If somebody's putting 100,000, not necessarily they'll be able to get the similar kind of benefit if they're doing it on their own in a single family, for example.
Yeah, yeah. So, I mean, you can leverage single families as well, but here's the thing about single families. I'm going to mention this because you ended with that.
Mm-hmm.
Single families are not valued based on their ability to generate income. Single families are valued based on what the house across the street, down the street,
Mm-hmm.
at the corner, what they are worth, what the neighborhood. It has nothing to do with income because it's designed to be something that you live in. And so you've got emotions, you got a whole bunch of different things driving value there. So that's the number one thing that you got to understand about single family. In our world, it's all about that cash flow. And that's really, really, really important. Um, so I think you're when investors care about the drip, they do. And I like the drip. But here's the truth. If you didn't take that drip and you put that money instead back into the asset and used it to generate more income, they would actually make more money. Now, the reality of it is investors like the drip. So you give them the drip, that's fine. But I'm here to tell you that if you actually didn't distribute money, and we distribute money, okay? I don't want you to think that we don't, but I've done the math. If I take that 5% drip and reinvest it and make the income go up, it's worth way more than it would have been in cash on cash. So now the leverage component, let's say we have a $10 million building and I'm able to raise rents $200. In that scenario, I probably put 4 million down. I probably borrowed 6 million. So if I'm able to get $200 in rent increases, when I go through the math and use a six cap, I'm kind of going fast here. But when I do that and I sell that property at about a $4 million profit, I'm able to do that because of the new cash flow I created. Oh, I just doubled my money. I put in 4 million and I raised the value by 4 million. Why was so if I paid 10 million, I would only have a 40% return, right? But if I paid cash, but
Mm-hmm.
because I use leverage, my down payment was only 4 million.
That's
I
true.
earned 4 million. Now I just doubled my money. So you're using leverage to amplify your returns. But here's the thing. You got to be careful with that because if you over leverage your property, it's just like margin your stock market, right? When you margin your stocks and they go down, you got a problem, right? Well, it's no different in real estate. If you
Mhm.
over leverage your property and income kind of goes down because maybe the market gets soft or something, if you have a problem, you lose that building, now you've lost out. So I always want people, yes, leverage is important. Yes, it helps amplify your returns, but you got to be really careful because most of our business is a big fixed cost base, right? It's not mostly variable, it's mostly fixed. And so our net income really changes a lot when we're able to grow income or decrease income. So just don't over leverage. That's the message that I want your listeners to take away with.
Yeah, no, thank you so much. And I think the way you're explaining it, and then it boils down to multifamily is a business. You wanted to look at it as a
Yep.
business. It's not a single family. That's the reason I brought the single family, just for the comparison's sake. Yes, you can leverage there, but still it's one house. And there's
Yes.
one rental income that you're going to get. Like you mentioned earlier, if the tenant
Mm-hmm.
moves out, you have zero income. And not to forget the tenant, toilet, and termites, you're going to dealing with that day to day. And I remember that, been there, done that. My husband, he hated that. He's like, oh, no, 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 there's no way we're going to go back ever to do
Yeah.
that again in our lifetime. So I think that's the reason that people lean towards a multifamily. So here, the question comes to my mind is, if somebody's new, sitting on the sideline, wanting to start, and they're just thinking, oh, I do not have any experience. I have very limited experience. Where should I start or how should I start? Even investing as a passive investor, because they
Mm-hmm.
might have their good paying job. They don't want to quit. They don't want to go 100%. But at the same time, thinking that, oh my God, I do not even have the experience to invest. How do you overcome that from your
Yeah.
experience?
So I'm a firm believer in understanding what you invest in. So the first thing I would do if I was that person wanted to start out in passively investing is learn as much as you can about the real estate business. so that you can understand and you'll know what a good operator looks like, what a good deal looks like. I mean, we have passive investors all the time that are in our funds go into our education side of the business because they want to understand the numbers. They want to understand how to underwrite. They want to understand how we would look at a market, all that kind of stuff, because then it makes them a smarter investor. And so that's the number one thing that I think people should do. You don't want to invest in something you don't ever want to invest in something you don't understand. That's why I don't do the stock market, because I'd be trying to invest in a whole bunch of companies that I really don't understand and I don't have time to research, right? I know real estate. That's why I stick to that. And so that's why I think if you're going to start out as a passive investor, you should do that. And then passively invest with it. Don't put all your eggs with one sponsor, put it with two or three. Why? Because you're going to see, oh, wait, I see what they're doing. That's different than the other guy. And why is this guy doing that? So now you're going to start learning from these people that you've invested with. So there's so many benefits of starting out passively. That's what most people do, actually.
So let's talk about a little bit about the risk management too. So what are some of the biggest risks associated with the multifamily investing? And then how can investors look into that or kind of figure out before even getting into something?
Yeah, so I'm assuming you're talking about passively investing. So what's the biggest risk? The biggest risk is you're investing in, I always analogize this to horse racing and a jockey, right? You're investing in the jockey.
Jockey.
Hopefully the horse is good, right? So what does that mean? Well, if you're going to look at investing in our funds, you've got to look at the person making the decision as to what to invest in and how to do it and so on. So I have 4 rules I want passive investors to follow. And if they do, they're probably going to be okay. And I see them break it all the time. Number 1, you got to make sure the person has experience. Number 2, they got to have a track record, and not just a track record of buying. They have to have a track record of taking deals full cycle. So we've done 19 deals, but we sold 14 of them. And our full track record is on our website. So you can see what we've done. So that track record. Then they need to be transparent, right? Or put our full track record on our website and had it vetted by a third party. That's transparency, right? Our investors have my cell phone. If they have a question about the investment, they can call me. They want to go visit the property, they can do that. They don't even need to tell me, and the manager will show them around. So that's transparency. And the last thing, it's really a little bit harder to figure out, but it's putting investors first. You need to make sure that sponsor puts investors first. And the way you do that is you look at what we call the PPM, the private placement memorandum, and you see, ask yourself, is it possible for this sponsor to make a lot of money and me as the investor not? If the answer is, yeah, he could do really well and I don't do very well, don't do the deal, right? They've got to put you first. And so what we have done over the 27 years is really fine tune so that I don't ever have to think about myself when doing a deal. If I just think about the investors and make sure they're okay, I'm automatically okay because we've lined things up perfectly. So those are the 4 rules that if I've seen people, lose money in this business, and I look at those rules and I'm like, oh, geez, they broke this one and they broke this one. And that's probably what went wrong. So that's the number one thing I want people to do is just assess that because, here's the reality. If you invest in a deal and it's your first deal and you lose money, you're probably not going to do it again, right? I mean, you just won't do that. And there's so much money to be made in this business. I always tell people, you've got to make sure that first one is a home run for you, because then you're going to be like, wow, this is awesome. And then, you thought you knew it was going to be successful. Now you knew it was successful. Now you're willing to go forward.
Yeah, you have shared multiple things over here. The due diligence is very important. It's
Yeah.
not like that if you just like somebody, that's not good enough to invest in somebody. Just
Right.
you just like somebody walked into the door and you say like, oh, I like the way this person looks, or talks or whatever, but not necessarily. You need to dig a little bit deep. And then you said a very good thing over here. You want to bet on the jockey, not the horse, because
Yeah.
when the horse is bad, if the jockey is good, they're gonna make the horse run, meaning to say they're gonna make the deal work
Right.
regardless. That's very, very important. And learning about the market and other bells and whistles is also very important. So we have shared multiple things, how you got started and how you're like really, really high proponent of investing in multifamily. So I wanted to ask you one question, if
Okay.
somebody's still sitting at the fence, what is your best argument for why one should invest in multifamily?
Yeah. So that is a really good question because It is, if you look at any wealthy person, I like to, if I want to go somewhere, I want to look at what that person is doing and
Hmm.
ask, why are they doing what they're doing? Because they probably, if they're wealthy, right? If let's say I want to be wealthy. Well, I look at what wealthy people do. Well, what do wealthy people do? They invest in multifamily. Most of them do. Why do
Hmm.
they do that? They do that, number one, because they're smart, all right? They understand the world differently than I do.
Hmm.
And two, you're talking about an asset that shouldn't be able to go away. Like it's not like it's a piece of paper, right? I don't want to insult any crypto people. I don't understand crypto. I don't put money in crypto. I don't know where is crypto. I don't show it to me. Let me touch it. I can't. See, you can walk up to my apartment building and you can touch it. You can live in it. It's there. It's real. And so I like to go down to basics. Sometimes people think that's boring, right? I might not get it to catapult to the moon like crypto might, but I got this slow, steady thing. So I always tell people real estate won't get you rich overnight, but it should get you wealthy over time. And when I did that first deal, I figured out that if I can figure out how to earn 18% annually, I can turn 100 grand into 1 million as a passive investor, buying an asset, getting its cash flow, selling it, paying the tax, reinvesting it. I did that 4 times in my math. It's too much to go over here in the details, but I can turn that 100 grand into 1 million. That's
Hmm.
pretty good. That's a
That's
10x.
pretty good. And then
That
if
is
you look
pretty good.
at, yeah, and then you can calculate the time too. If you take the 7% rule and then change that to whatever returns that you're telling us,
Yeah.
and you can just, figure out what timeline is going to take, which is going to be much shorter. So, share with
Mhm.
me, what do you see in your crystal ball for the multifamily in the upcoming years now?
Oh, I think it's going to continue to grow. It's going to become people, especially the stuff they're building now. They're resorts, man. I mean, you
Right.
can't you can't put that stuff in a single family house unless you're wealthy. So,
Mhm.
it's a lifestyle thing for people. They're beautiful places, and I can't imagine it going away. I mean, if you just look at the way areas grow up, there's always multifamily in that mix. And a lot of people, it's becoming more and more common that people don't want to have this baggage of this house dragging
Big,
behind
big
them. You know what I
mortgage.
mean? They
Mhm.
say, okay, I'm tired of living in Fort Lauderdale. I want to go try Tampa. Well, they don't have
Mhm.
to go through this whole process of selling. They just, I'm leaving. And they go and they rent a new place and they enjoy that. So many reasons why multifamily isn't going to go away. At least that's my opinion. So
That's
my
true.
crystal ball is we're all in. It's going to continue to grow because of all the reasons that I've talked about.
That's true. And I agree with you because, and especially today's generation is the experiential generation.
Mhm.
They want to create the experience versus hoarding or just, kind of attaching themselves to a bigger house, bigger cars. That's the
Yep.
reason we have all these new companies popping up like
Hmm.
Uber or whatever, the Airbnb and all these companies are popping
Yeah.
up here there because it's just like all the experience, all the collectively doing stuff. So share one more golden nugget with my audience.
Yeah, one golden nugget. So if you're thinking about getting into multifamily, the,
Hmm.
the, the golden nugget here is just learn. Look, it can make you insanely wealthy. It just can. Millionaires have been built
Hmm.
just on multifamily. But just take the time to learn. Just invest a little bit of time. Learn how to underwrite a deal so that so that you can tell when somebody else isn't doing it right. Just learn the business a little bit and then go and invest your money in it. And then follow the 4 rules that I said. I mean, those are the best nuggets I can give for somebody starting out. I will tell you the number one thing that people don't do when they're starting out is they don't want to roll up their sleeves and do the work. John Maxwell said, this has stuck with me for a long time now. People want to do what you do, but they don't want to do what you did. So it's the did part that they don't want to do. Go do
Hmm.
the did part. Because if you do, you're going to get to where I am or where other people are. I mean, there's a lot of blood, sweat, and tears in this 27 years that I've been doing this, and I've learned a lot along the way. That's it, right? You have to do what I did in order to do what I do.
Yeah, no, thank you so much. I really appreciate that. That's very important. And also, not just gathering all the knowledge, learning, but also partnering with the right people that can
Yeah.
take you to the finish line, whatever your finish line is. And then that's very important as well. So, this brings us to our rapid fire round. I'm going to ask you 5 questions.
Okay.
You can answer it in one word or only one sentence. That's it.
Okay.
So, the first question is, what is one of the most important thing that you have learned in your life? And how did your life change after learning it?
Um, I learned to get out of my own way, and it changed everything for me.
I like that. Most of the time we are in our own way. We are stopping ourselves or doing things. I love that. Thank you for sharing
Up
that.
here. Yep.
Share with me one good book that you would like to recommend to my audience. You just
Well,
mentioned John Maxwell, but maybe one more.
yeah, we'll do another one because I think it speaks volumes. The 10X Rule by Grant Cardone. Why? Because it always takes 10 times more effort than you think it's going to take. And it's true. It's just true.
That's true. But the returns could be exponential too, if you're putting that kind of effort. So
Mhm.
always remember that. In one word, what does life mean to you?
Fulfilling.
I like that. What is your biggest passion?
What's my biggest passion? Helping other people do what I've been able to do. It is
Wow,
really exciting for me to do that.
that's really good. There couldn't be something better than that, that I can tell you, helping
Yeah.
others, because that's what
All
we are
right.
here for, right? Connecting with each other, helping each other grow. That's the
Yep.
purpose of life. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
Get out of your own way. Go do it. I'm just telling you, it holds everybody back, and it did me for
That's
a
so
long time.
true. That's so true. I mean, giving yourself permission to do something is the biggest thing. So how can people reach out to you?
Yeah, so go to our website, kripartners.com. kripartners.com. You're going to find when you get there, if you want to be active, we can help you. If you want to be passive, we can help you. Either way, we're just trying to help you create wealth through real estate. So just go to our website and then reach out to us.
Thank you so much, Ken. I really enjoyed our conversation today.
Thank you for having me.
Thank you, everyone, for tuning in to the Real Estate Vibe Show. Don't forget to subscribe, leave a review, and share this episode with anyone looking to elevate their real estate investing game. Until next time, stay focused, stay inspired, and keep building your real estate vibe. Thanks again.